Okay. We are back with another WWA liquidity inducement theorem kind of breakdown, or their trades here on Instagram, just like we're going to be doing a couple times a week. That's the goal. So let's get it going here. This is the one on December 16th, so the day after the one yesterday. You can see they even have a little bit of a questionnaire here as to why they or what this trade involved. And so, yeah, let's break it down from the higher time frame. Look at it right now. Obviously, a lot of people wouldn't be looking to go short here, but this is actually one of my favorite setups. So, and it's one that I have been trading for the last couple of years. So I'll show you a little bit of a breakdown here. So first of all, I just wanted to show you the overall structure on GU and why it's reacting to certain levels here. So you could see, let me just get the actually annotation tool out from up here so I don't mess up the charts. Okay, perfect. So essentially what we have here is we have a monthly high here, okay? One sec, just move that. Okay, perfect. So we have a monthly high right here, right? And we have that swept with this high. And then on a fractal basis, we have a consolidation, a sweep, a break of structure. So on a fractal, we have a confirmed, sorry, on the higher time frame, we have this sweep, and then we have a confirmed fractal right here that comes up, mitigates this, and drops down. And you can see very imbalanced price action right here. And we follow up. If you draw, not like that. If you draw a vertical line from here to here, you can see that the left side is very equivalent to the right side. This is a beautiful sell model, and that's something that I really like to see. But anyways, as you can see, just going further, we break back down. We have a consolidation on this side right here. And as you can see, that's exactly where this consolidation happens. And then we break down structure, mitigate this level here. Why did that level get used? Well, simply because we have a consolidation, equal lows built, mitigation up. So this was a strong low here, and we mitigated the last unmitigated level right there. Okay. And so you can see it was induced with these lows right here. So liquidity was pooling right below here to support these longs here. And you can see it worked out like a charm. Now, this is monthly structure, right? This is monthly structure. So when it breaks down like that, it breaks monthly structure. Now, if it's going to break monthly structure, you can at least look to target daily levels. Okay, so this is a daily high right here, and it sweeps monthly level, so immediately consumes the daily structure, mitigates these wicks up in here, and then continues down. Now, failure to create a lower low, so we mitigate these wicks, and then we break structure right here. Okay, so as soon as we break structure right here, this order block holds, and it goes back up to mitigate something further up in here. Now, when this was going on, I don't trade GU personally, but I would assume that because this was a failure and because this broke, I would assume that this high is weak. And so that this was going to come take out this high to get into higher levels, like up to here. That didn't end up happening, right? What ended up happening was, again, consolidation. We swept into that zone, broke structure, and we left an inducement right here. Okay. As soon as it breaks back down and it comes back up, we can be confident now that because this broke significant structure right here, that this is inducing this POI, and that from here we can look for continuation to at least take out these lows. So that's just the whole breakdown of basically everything that happened here. But one thing I do want to point out here, and it's super key, is you can see on these continuation trades, where has price respected? Well, when you look at, say, this range right here, okay, what ends up happening is whatever happens on the left side will likely happen relatively in the same place on the right side. So you can see we have a consolidation here, right? A little order block here. We get it, and then there's another on the sell side of the curve. You can see a consolidation right there, and then break down. Okay. Now, if I move it over here on the buy side of the curve, it's an order block. It respects, breaks down. It's used as a resistance on the other side before the breakdown. Again, same thing here, right? Even on the buy side, right? We have a sell side right here, right? Consolidation, we break up, consolidation, boom, breaks through it, doesn't respect it this time because it needed to go up to higher prices. Consolidation right here, what happens? We respect it, break through it, respect it again, go. Okay, so it's something important to note because this is where you can be confident to look for some trades, and that's why, coming back down to where we are right now, is I was looking. The first area of confluence would be right here, right? You can mark out this whole thing, but I would just mark out the last down candle. And the reason why I would mark out the last down candle, because if I were anticipating upside, I would anticipate this to respect and keep going. So which means that there was definitely going to be some buys locked in right here, but it failed and it broke through. And so just coming back up to test that, and you can see that's exactly where price got up to right here. This is right where price is right here, by the way. Okay, so let me just mark that out with the main zone here. And now I just want to dive into why we respected here. Because it does kind of seem like random, like, oh, why did you pick this POI right here? Well, first of all, we have to understand this right here. That's the key piece, right? Because if you look on the, is it a weekly? Yeah, you can look on the weekly, but also on the monthly. What do we have here? This is a monthly order block, the last order block, really, right? The last main order block. And you can see here that this is the last order block that broke structure right here. So these are what I like to call like a continuation OB, the OBs, order blocks that break significant structure. Well, this one actually didn't break, but this one here. And so when we get a return to these order blocks, it's a typical continuation play. Now, additionally, what you can see here is that this wick was mitigated with this wick. So therefore, this wick technically should hold. It really shouldn't be dabbling any further back down into here. Just based off of this right here, we're at 50% of the monthly order block. We also filled in the imbalance. So this is really the last area of imbalance, right? Because essentially what a wick is, if you just draw it out, is you have the open of the candle, and then you have quick price action that goes down. So say it's just one bearish candle, and then you have the next bullish candle to follow. And excuse the drawing, I mean, it's absolutely terrible. let me draw it with a box instead. Okay, so price opens up, we have a bearish candle, and then we have a bullish candle like this. Okay, and let me just add it like that. That's what a wick is on a higher time frame. On a higher time frame, this right here, this from the open down to the low here, this is just a wick. So it's essentially just an order block, or it's going to be an imbalance, right? And so that's why we gotta assume that we gotta mark up these wicks, and we gotta say this is going to be an imbalance, or it's going to be an imbalance on a smaller time frame in that wick. That's why price respects wicks, like you can see right here, right? Boom, comes up to this wick, gets about 50% of it, and you can see 50% of it mitigates perfectly and then drops. That's the reason why that happens, is because there are imbalances. But anyways, I'm getting a little carried away here. So that's why I chose right here. This wick should hold. So there's probably going to be some imbalance somewhere here. You can see it's induced right here, right? It's induced with this big wick here, which you could have assumed is going to hold. And you can see we got a nice response from there on the daily. So this was let's see, this was a 110 pip wick. So you could have definitely got some trade in there if there was some opportunities or some entry criteria was met. But you can see that this one induces this wick. So if we go into the 4 hours, is there anything in this level of interest that, well, you can see right here. Look at this. This is the wick, right? This was the original wick, but then you can see it dabbled down into it a little bit, mitigated what it had to mitigate, and then come back up. So realistically, from this wick to this wick low, there's probably going to be some imbalance or something in there. So if we just go left, you can see tags into it beautifully, right? Now let's get into the actual trade, because I just wanted to point out why this order block held first. Simply put, we have this level right here, and again, on a smaller time frame, just like I said, you can see here we have this kind of consolidation, this sweep down, this break of structure, and then we have this support and resistance kind of zone that developed from this level. So there's definite longs that are coming into the market here, right? This would have been ideal to hold if it's going to continue up. It doesn't. What happens? It just breaks back down. So this is a valid a valid level. And yeah, like if you really want to, you can even, like I said, this is going to be the last down close candle, so you can even refine it a little bit to this one here. Okay, so that's valid as well. And then additionally, we have the response off this move, first of all, off of this OB, right? We get a nice response off it. We start breaking structure. So to me, I'm thinking to myself, okay, well, we're probably going long right now. We're probably going long, but this inefficient move needs to be corrected at least, right? Needs to be corrected. So where's the likely area that we're going to be going to? Well, we're probably at least going to be coming up to here, which we're currently in. If I turn on the monthly and weekly breaks, because there's going to be significant liquidity resting at these levels, right? At weekly highs. You can see here, weekly high was right here. If I just mark it out like this, weekly high was right here. It went up, and then we got a move back into this price range, right? Into this price range right here, dabbles into it, and then we get this blast off. Okay. So we get this blast off up into another weekly high, which is right up here. Boom. So when we sweep significant highs and we sweep them inefficiently, these are going to be great setups for me. These are personally some of my favorites. And so let's just go back down to here if we can see a similar setup. So this was all a clean leg on a higher time frame. And what did we get here? Right? We get a sweep above, and then we have structure building, boom, structure breaks right here. Right? And we get a sweep. Okay, we get a sweep. We have our order block here, right? This whole candle can be used, right? This whole candle can be used. If you want to refine it a little bit extra, you can just take that wick. Remember, like I said, the wicks will have some imbalance in it. Again, it's a little bit risky sometimes because sometimes it just respects the actual wick, especially when there's something like this, or sorry, it respects the whole candle as opposed to just the wick. And you, especially when you have an inducement like this right in front of it. So it's a little bit tough. I would just say don't be greedy. Like if the difference is like 1 pip or 2 pips or whatever, like, so this would have been like a 3 pip stop as compared to like a 2 pip stop. So again, I would just probably have taken it right from that candle. But you can see what happens is that now you have these equal lows right here. Okay, you have these equal lows, you have an inducement, you have your sell model right here. So you could have easily shorted right here. And let's just go from right up here. Okay, just for easy sake. And then again, if we're going to be putting our stop 3.5 pips roughly around like that, and then we'll add spread to that. So say you have 0.3 spread again on GU, and then where are you going to be targeting? Well, you're going to be targeting, or was it on the 4-hour? Yeah, I think it was. Yeah, we're going to be targeting this order block right here, right on the 4-hour. So we break that back down, targeting this order block. And you can see where another great area to be targeting, like a more refined level, and you can be looking for buys, is going to be, see, we have a continuation OB, but then we have all this imbalance underneath. So this is actually something, so you can target, what I would do is I would target this OB, but I would be setting, if I were to set any limits or anything, it would be just underneath this, because this is inducing, right? This is going to be inducing, oh, that's not what I wanted to put right here. That's going to be inducing this imbalance right here. And look at this order block right here. Just a gorgeous order block, right? And again, that could even be further refined down to this one, just because this is the last imbalance fill. But I would still maintain these lows. And you can see that that's where it gets down to perfectly. I mean, right? So this isn't the trade that they took, but I'm just saying, when you have an inefficient sweep of weekly, daily, monthly highs, like this is when I'm looking for these reversal trades. And these are like my bread and butter setups. And you can see a very similar thing happens right here, right? We get a sweep on, let me change this actually. I just have the standard deviations on. What was I going to say? Oh yeah. So we have a sweep of this weekly key level. Again, where does it go into? Nowhere really that that my mind is like gravitated towards on this time frame. There's nothing that I see here on the 1 hour. Is there anything above this? Well, there actually is. There was this sweep on liquidity and then this break of structure, right? Now, you can see that it comes down, we mitigate again. So we mitigate with this candle right here, really, right? This was the main mitigation candle. So let me just highlight that. And you can see did we touch it? Yeah, we did. We did dabble into it. So I'd be looking at if 50%, let's see if it gets hit. I'm not too sure actually if it does. It's going to be really close to that if it does. Okay, so POI, right? So just above this high, we have, again, 33,750 roughly. So let's see if it gets hit. Look at that, to the pip. So we have this rejection block here, and it was mitigated. The front of it, the second part of it was wasn't mitigated. I wouldn't personally just set a limit there or anything, but just, again, just building confluence in this level above that weekly high, just to give you some more confidence to take it back down. Now, where would I be looking to take it back down to? First of all, when we look at this upside structure, we have this, right? So the first area that I would be looking at is this right here, right? This imbalance fill. If you want to be a little bit safer, you can just mark out this whole thing because it could just respect that, the higher time frame OB, or sorry, the larger OB there, and then go up. But what I would be doing is I would be looking at that. Additionally, what I would be doing is, because look at all this. Was this swept? No, this right here. See these equal lows, relatively equal lows here. Boom, swept with this candle. You can see that there was another little inducement here on a smaller time frame, and then we broke structure right here. So this, to me, even though these are equal lows here and relatively equal lows there, even though that's the case, again, we're in that weekly order block, so we have to be a little bit more bullish. We have to be a lot more bullish, actually. And so if price is going to come back down, I'd first be looking at managing my position here. But ultimately, what I would like to be seeing is that this is used as an inducement to come back somewhere into here. Somewhere into this wick actually would be like ideal, right? Because there's going to be some imbalance and there's going to be some order block and stuff in here. So let me just drag this down. And so this would be my final target, really. Because again, I'm anticipating that this weekly order block holds. So let's dive in on the smaller time frames here. What can we see? It actually already happened, so let me just bring it back here. Okay, so what happens here is we have a sweep on liquidity right here. Sweep on liquidity. Another one right here, so that we have a double sweep, which is something that I like to see. The more, if you can sweep one or two or three times on one move, it's a higher probability sweep. Additionally, what else do we have? Well, we have this failure right here to make a higher high. And then we break down, and then we use this as the mitigation block. Now, this mitigation block was mitigated with by this candle right here. See this up candle wicked and then came back down. So this one is actually the last candle that I would be looking at to take this trade. Now, you can be a little bit, you can take the front of it if you want, right? The front of the candle, or again, like I've been saying, you can take the wick mitigation. So just above this wick to the high of this wick, right? You could take anywhere in between this wick, either 50% of it or right at the front of it. Again, you want to manage your greed here because obviously you don't want to over refine to the point where it's like, yes, you're saving 1 pip, but you're also potentially missing a really incredible move here. Okay, so just keep that in mind. That's all I got to say about that. But okay, so we got a break of structure here. So now we have a break of structure of this fractal. And so that means if this is going to come back down to here, right? If this is going to come back down to break this low and then come in and fill in this whole imbalance right here, then what we're going to see typically is we're going to get an inducement right here, fill that, and then come back down. And then by the time it breaks this one, it might not reverse back, or it might not come back up to mitigate and come back down, right? Because it doesn't have to do that. It doesn't have to present 1,000,001 opportunities to get in. But that's why I would definitely be aggressive like they were here and in taking this one without the major break in structure. So yeah, this is what I would do right here. It has all elements, right? And what are the elements to the setup? Okay, so we have a sweep on significant liquidity, and in this case, it's going to be a weekly high. Okay. 2, it did it in an inefficient manner, right? So it swept inefficiently. And you can see this is what I'm saying here. This whole model right here, imbalance right here, sweeps that weekly high. What else do we have? We have a sell model. And the sell model consists of on a smaller time frame, right? So on this 1 minute, what do we have here? We have lower time frames sweep here, okay, right here, lower time frame sweep, break of structure right here, inducement right here. I'll mark that out in a little bit, and then we'll call it the return to the order block or return to the origin as per ICT. And that's it, right? And then for targets, you can target structure or the imbalance fill. Okay. And that's it. So this is a model in itself, right? And this is one that I was using for a very long time, just this, until I added some other things to my arsenal. But you can see here that the imbalance fill, you can see that this last down candle here could very well hold, right? Because it's a higher time frame level. But what I would do is I would be looking at this one as well too. Okay, just this little zone here, because this is where this inefficient move originated from. And then we had that sweep on liquidity, that break in structure, this inducement right here. Okay, inducement right here. Oh, didn't save there. Okay, and then we have this imbalance. What's left of this imbalance right here? Right there. Okay, cool. So now we have everything that we need to take this trade. So you can enter just to catch this wick fill right here. And again, I would put my stop above the main high, because this is really the strong high up here. No point in trying to risk it extra just to get that to get a tighter stop there, in my opinion. So yeah, we'll say 7. Excuse me, one sec. So I wouldn't risk it by putting my stop to here. Personally, I would rather my stop just above the strong high here. And again, if it's going to be at the strong high, 7.2, let's put it to 7.5, right? That's going to be our stop with spread. Okay. And again, where are we going to target? First target going to be somewhere around here. Okay. 11R. Now let's see how it goes. Obviously, I saw this happen a little bit before, and you can see that caught right to the tip right there. You can see now we have equal lows to target, interim equal lows to target, which is great. And then you can see that we have this somewhat of this trend line kind of following right now. So just building up this liquidity as well. That's going to get absolutely dusted. Okay, so let's see, breaks down, boom, takes out that level. Again, this is the higher time frame structural level. So as soon as this gets taken out, then you can be really confident that it's gonna go. Boom. So right there, it gets taken out. You can see significant structural level gets taken out. Look at the reaction, right? Immediately it corrects. Immediately. Now on a micro level, we swept, broke structure. Okay, swept, broke structure. So any return back up to here can be taken probably with a little bit of sweep. I wouldn't take this because this didn't break this low here. So this is considered a weak high because that didn't break. But let's see if it respects. It does. And yeah, let's see the result here. Let's go on to the 5 minute. And let's see if we get a decent reaction from here or if it's going to come back down to here. Okay, so you can see price action respecting. Okay, let me go on a higher, let's go on 15 minute because it's kind of coming down a little choppily. Okay, so beautiful Asian consolidation. If we're looking for price to continue down, Asian consolidates, we get a sweep to the high side, right? And then that means that this will probably hold, this order block right here will probably hold and continue down. Yeah, okay, so it did sweep it one more time, but again, if you were maybe you got stopped out on that, maybe you waited for confirmation entry on a smaller time frame, but you can see it worked out. Sometimes that happens. Okay, so again, look at that. As soon as it reacts off this level, look at that. We get a little reaction, not sustained, however, and we break right through. So again, I think that this is going to be used as inducement here. So if you just monitor, right? You monitor how price is reacting. This one was clear that it wasn't going to go down or that it wasn't going to go up. Didn't have the strength for it. Okay, so then the next target is going to be below these lows, right? And realistically, you could even move that down into this imbalance right here. But I would just be looking at liquidity first, right? This is where sell side liquidity is going to be. So I'd be targeting there. Let's see if it goes down to there, and let's see if we get a reaction there. Okay, so we get a little bit of minor reaction. Now, if we're looking for a reversal, well, look what happens. Asian consolidates, right? Asian consolidates immediately. What happens in London at about between 2 and 3 a.m. We're probably going to hit the low of the day, and we're going to get something like that, is what I would assume on a reversal day. Okay, what time is it right here? 4. So it just kept going down actually until a little bit later. But yeah, essentially did exactly what as anticipated. It just didn't provide a setup right there. It went so deep into this, and you can see where it went, right? Just below this wick and this wick. This was the actual wick imbalance, and you can see that it dabbled right back into it. At the same time, it also dabbled right back into the higher time frame level as well. So if you were targeting any of that right there, that could have been the trade. And I believe that was what they caught here. So yeah, to me, it was a prime setup. It was, I don't know what they would consider a prime setup though, because I think that their prime setups are with trend, where this wasn't necessarily with trend. This was more of a sweep and reversal type trade. But to me, that's a prime setup. So I would probably click the prime setup, or it's the, I thought the rejection was fine. So yeah, let's see. Oh, I don't even think I can answer it. No, I can't even answer it. But again, that's where I would be looking at. And let's see. Yeah, so see, they caught it in the exact area. They caught it a little bit. They front run it a little bit. So they didn't actually use the wick imbalance there. What they did use instead was the actual, oh, it's so laggy right now, Jesus. What they did use was this. Right? That order block fill. Okay, so that's what they used. So you could have used either. And again, like I said, there's no point in being greedy. There's no point in being greedy if like 1 pip away. Like, who the hell cares, right? You want to be in the trade. So anyways, that's the breakdown. I hope you guys enjoyed it. I hope you guys gained some value out of that. And again, test this model. Again, you see it 2 times, right? It happens right here, clean leg, gets filled. happens right here. Sweep, clean leg, gets filled, right? Definitely check out this model and test it, gather some data on it, and I can guarantee you, you're going to be, it's a super profitable one. So, yeah. Anyways, guys, I'll catch you in the next one. Cheers.